Anybody? Anybody?
Yes.
Yeah.
Yes.
Okay, thank you.
You
Good.
can,
Okay,
you
because
can.
how many times have I done this and like nobody can see my screen? Okay, so so I'm in our database. We're finishing up the demo data. I hope to have it done in the next couple of days. So the presentation data set will be complete. And you'll get full instruction on where to go, because learning the product is easy. It's learning where the data is and resides and how you use it that makes the difference. So whenever I do a presentation, I go in and open up the real estate module beforehand so that there's there's none of this, right? So I can toggle between the Sage Intacct product and everything related to it here, so that people can see it. So I'm going to always start off in the real estate side. And one of the things I highlight when I do my presentations is the look and feel of the product. The other guys in the marketplace, their products are not pretty. And a big deal in the real estate industry now is we're graying out as an industry. It's hard to find, recruit, hire, train, nurture, and promote talent in the industry. It's not a glamorous industry anymore. Used to be when I started in 1980, 1982. Everybody wanted to be in real estate. Now it's like, it's not as glamorous as being in tech. So one of the things I highlight is how easy it is to navigate and how pretty the screens are. And I say that because as an older person, and I'm talking to younger people, there's a whole generation of people that are using their telephones to communicate, and the applications that people use in business have to be not only easy on the eyes but easy to navigate. And while that's one of the advantages of the Sage Intacct platform, I can go in and I have uniformity. So if I'm here I get tasks set up in reports. If I'm under Sage, I have pretty much the same general information, right? I've got accounts, I've got setup, I've got my views, my books, all the things, and there's uniformity throughout the system. It's easy to understand and navigate. So when I'm in here, and the first thing I'm going to do is I'm going to talk about tracking information. In the real estate industry, we're really concerned about how things are tracking, first at the property, then at the unit, and then at the resident or tenant level. Here I'm going to go into properties. So I have a couple properties here. This was my example. If you are in Florida, Texas, or Hawaii, they charge sales tax on, or I should say it's not sales tax, they charge a tax on income produced in rentals. So you have to be able to account for that. Here we've got Columbia Place. I'm going to go in and show this. Now, we talk about ease of use from the perspective of everything you're going to need is across the top here. We've got general addresses, square footage, etc. And when I start at the general side, I have my property and location, user-defined field for what kind of property type it is so I can report on it. This is the interest related to security deposit payments. Some states or municipalities require landlords to pay security deposits. This is usually, I rarely have seen it in the commercial world, but in multifamily, for example, the Rent Control Board of San Francisco required you to pay interest on security deposits, or as I like to refer to them as the People's Republic of San Francisco, because one year I was actually paying more on the interest on security deposits than I received in the rent increase that I had to give. So go figure. We're going to count the number of units, what's occupied and what's leased. We've got processing dates, counting controls. I want to point out here that the property can be on a different fiscal year than a single property can be on a different fiscal year than other properties or the mothership. So it's all dependent on how they do the processing. and how they want to do their accounting. I have square footage controls. Again, this is completely user-based and user configured. How often are we doing it? Monthly or annually? How are we managing our occupancy controls? There's a concept in real estate called vacancy loss. I've never seen vacancy loss in commercial, but I'm sure there's someone out there doing it. Usually for multifamily, it's an accrual basis. So how are they going to do that? Straight lining of rents is from a Financial Accounting Standards Board ruling, FASB 13. So the straight lining of rents, we do it. I've done well over 2,000 presentations in the real estate business, and I've only spoken about or previewed straight lining rents 5 times. So usually it's going to be like a publicly traded company or a company with a lot of investors. They have to do full GAAP accounting. For the world of retail, there's sales overages. So we'll track that here. When I go up here, I can have multiple types of addresses. Usually people are just have their one street address. But a key here is square footages. Leases can have any one of a number of different types of measurement. It could be usable, it could be rentable, it could be gross leasable, it could be gross rentable, it could be retail versus office. So again, user configurable, I can have unlimited types of square footages. I can put in a specific type of value to it, and then I can put the date. And you say, well, why would you do that? Because I could have a property and build another building on it, which changes the square footages. So it's all in one place. Here's the charge controls that are related to this particular property and whether or not it's associated with gross potential rent and whether it's subject to late charges. Again, I could have unlimited types of charges that are associated with the particular property. Also, unlimited types of deposits. Rarely do we see more than 1 or 2, but it's here. Also, how do we charge late fees? Again, we're setting this up at the property so we can drop it down to the individual leases. That means for our user, easy setup. Again, it's about workforce efficiency. We want our team to be efficient when they're entering in a new property, a new tenant, a new resident, a new unit, etc. It makes it easier. Management fees that are associated with this particular property. The advantage of this is that I can do any type of formula or flat fee or multi-tiered. Again, set up at the property, drop down to the individual leases, makes it easy for the setup. We can do checklists associated with the start and termination of a lease. We can track our individual taxes for the property. What usually comes up at this point in every presentation I think I've done is someone's going to ask, well, how do we track insurance and taxes at the lease level? Absolutely, because it's really important in the real estate business to track insurance, specifically in the commercial side. Got a lot of great stories about that. There's 3 things commercial property managers hate. One is budgets. Number 2 is expense reconciliations at the beginning of every year. And the third thing is tracking insurance down for our leases. So we try and make lease insurance information easy. This, of course, is at the property level. I can have multiple types of insurance, which, especially if you're a third-party fee manager, this is key because you want to track that information. And finally, I've got attachments, and I can put any type of attachments here. Including photographs. I like showing this because what you're trying to inculcate to your prospect is this is your central repository of information. We're trying to get rid of the file cabinets, right? Which also means that we're also, and this is key, we're breaking down information silos. It's been a problem in the real estate industry for time immemorial that the property management team has no idea what's going on with accounting and vice versa. And utilizing a central repository means that, as an example, I can have dashboards or reports, or I can schedule reports for my property management team so that they can get the information that they need without going over and bothering the accounting department, especially the first week of the month when they're busy doing, bank reconciliations and all the money starting to come in, and then the property manager wants a delinquency report, but I've got it all in one place. So I even have a title report here, so I can put whatever is associated with the property right at the property level. From here, I take our prospects to the unit. I could have any type of naming convention for my units. This is important because a building may be suite 1 or unit 1 or an address. We don't care. We're just going to provide the tool set for our market to be able to do what's right for their properties. And here I've got, I'll just go up to this one at Columbia. Again, what type of unit is it? So if I have a mixed use building, maybe it's retail ground floor and office above it, or retail ground floor and multifamily above it, we don't care. We'll allow everybody to record and report on the things that they need. I've got my addresses, building, wing, floor. For gross potential rent, I'm going to need to put the market rent in here. What kind of amenities does the particular unit have? This is specific to multifamily, of course, etc. And then what's the status if it's pending move in or move out in that particular unit? Back to the square footages again. This was, again, key. Units in commercial walls move. I could have 1,000 square feet in unit 1 and 1,000 square feet in unit 2. I've got two vacant units and a leasing agent that finds someone who wants 2,000 square feet. That wall is coming down. So, and it's date driven. So if let's say Joe Smith has 1,000 square feet and then he takes the unit next to him, it's now 2,000 square feet. During the year, the square footage is going to change, which means my numerator and my denominator are going to change. My numerator is going to change when it comes to his expense recoveries. So we pick up all that information automatically. And then here's our attachments. So I can attach an as-built plan at the unit level. This is the kind of thing that makes property managers and construction people and their ilk very happy to see this kind of information at the unit level, so they don't have to dig through a file cabinet. And then we have the tenant set up, and tenant is different than lease in our world. And why is that? Because the tenant, we could have multiple tenants on a lease. We could also have multiple units on a lease. So we're tracking it that way. And the other thing is that the way the solution was created, we're utilizing the Sage Intacct accounts receivable module to do all of the accounting and collections. So it's not a separate module. The advantage of that is I can have my accounting people in accounting and my property management people in property management, and they can report as they need to, but my accounting people don't like property managers in an accounting system. So it keeps everybody separate. Another issue among our world is security, right? So I promote this as being part of the security wall that we put up against, property managers versus accountants. But the advantage is that even though we have that wall for security, because of the way we're able to do dashboards and reports, I'm breaking down those silos. So when I fill out this information for tenant, it will flow right back to the tenant. Well, it would be the customer screen or customer fields within accounts receivable. And now we'll go to the lease. Now notice this says setup. I've got properties, units, tenants, corporations, etc. But under tasks, I have leases. The assumption is that we're going to set up a property in a unit and we're never going to touch it again unless someone moves out and the walls move, as I said, so it's more of a setup function. Leases, though, are probably going to be a regular event with most organizations. So I've got manage my leases under tasks. When I go to my screen, it's going to show this information here. And then if I go into this particular tenant, Brandon's Bibles, I have the property information. Again, I can add multiple tenants and multiple units for a particular lease. And then I've got my important dates. They have this coming soon. I don't know what's coming soon, so just ignore this. My recurring charges. So the process when you get a lease in, they call it abstracting a lease. And that's the terminology. That's what we've always used. So I get a lease and I'm going to abstract it right into the system. The lease is going to tell me what the charges are for this particular lease. In this case, this is a retail tenant, and they have a triple net lease. That's net, net, net. And those nets are CAM, insurance, and property taxes. We can see that it's for a specific unit. So I could have different amounts for different units for the same tenant. So it's easier for setup. And then when I go in here to the charge amounts, I can, when I abstract the lease, it will have the rent steps. Now, here's a side note. Over the last, I don't know, probably 7 to 10 years, inflation has been almost non-existent. In fact, there was even a point where it was negative. We were in a period of deflation. So we didn't put in CPI, Consumer Price Index increases in the system because everybody was going away from it. They were all doing step increases. Now inflation's, was 7% or 6% or 8% or 4% or whatever it is. So people are now putting them back in their leases. And the common one would be CPI or 4%, whichever is greater. So right now we just do step increases in the release. I think that's coming out in October or November. There will be CPI. But what you want to show here, what most people will have, is the ability to do retail rent step increases, whatever the case may be. Who's getting billed? When's the next date? You can see I'm working on my presentation data set here. I've done through January of 2022. So I've got 13 months in. Is there termination date? What are we basing the taxes, insurance, and CAM on total square footage versus any one of a number of other types? And then we can go into recoveries, and I'll go here to CAM. This is key for the system, and that is I can set up templates and drop them down to individual leases and then override them. Now, most leases have pretty much the same information in them. Yeah, to be fair, I could have 12 leases on a property and 11 different recovery clauses because every tenant can negotiate something different, and every landlord, if I buy a property, I'm assuming the leases that were there, right, they're being assigned to me. So it makes it easier in setup, and I can make whatever changes I need to when I'm doing my recoveries. Here is a CAM recovery. Let me get really specific on this. When I was managing properties, we had 4 Family Dollars in our portfolio, and they had very specific clauses related to their triple nets. So unfortunately, I had to do theirs by hand, and I had to do everybody's by hand because we didn't have a system that could actually do recoveries well. So I could have set up a Family Dollar CAM because theirs were unique. So I could set up unlimited templates and drop them down to the particular tenants based on what their needs are. It doesn't have to be a calendar year. It could be whatever year, whatever the lease says, um, what kind of charges. And then I have the ability to classify them or categorize them and then put in the associated general ledger accounts. So it makes it easy for the setup. Uh, what's the numerator and the denominator? Again, it could be total or it could be tax basis, or the most common ones are rentable, usable, and gross leasable. So, and you could say, well, what's the difference between a usable and a rentable? Great example is in an office building. My floors are 10,000 square feet, and I have a tenant that takes 1,000 square feet, and they're 10% of the floor, right? Um, but the the usable is 1,000 square feet, but we're charging them the rentable, which would be the common area as well. So we would charge them 10% of the hallways and the bathroom and all that other things. So instead of it being 1,000 square feet, they're actually paying rent on 1,100. So rentable square foot is 1,100, but usable square feet is 1,000. That's a great example of that. What kind of controls do we have for our reconciliation? Is there a management fee associated with it? How do we calculate? Because we may have, there's a concept called increase over base year. We could do that. We've got stops and caps, all associated with the expense recovery. Up next is late fees. Again, I could do tiered late fees. So maybe in my world, it was the rent is due on the 1st, it's late on the 5th. And if you're late, if I'm come in on the next day, the 6th, and your check isn't in the mail, I'm charging you a late fee. That late fee was 5%. So we could do that, or we could do a flat amount. So it could be it's 5% on the 6th day. And if we don't receive anything by the 15th, we can start charging you $100 a day. And I've seen a lot of iterations of that. So we don't, again, we're not telling our prospects how to run their business or what their leases should say. We're going to give them the tools that they need in order to run their businesses. And anybody who's looking at this, general, recurring, late fees, deposits, checklist, insurance, etc., this is all about lease administration. It's a big, big issue. And this particular part of it, the recurring charges, not missing a charge, especially a rent increase, is a big deal. It's really embarrassing. I've had it happen in my career where I've missed, you'll love this one. I missed a rent increase. I didn't discover it until the next year. And then I had to go back and tell the tenant that they had to pay a year's worth of rent charges because it was missed. It's embarrassing, causes huge conflict because, the tenants could be barely making the rent payment that you just paid them, and now you hit them up with a, um, you know, $30 a month for 12 months. So now they owe you $360, and they're going to get a rent increase on top of it. So lease administration and tenant relationships, huge deal. And we want to talk about how the solution can help mitigate any issues with your relationships with your tenant, because again, it's a central repository of information all in one place. So one single source of truth. This really helps with their managing their tenants and the whole lease administration side of things. And the other side of it is, of course, capturing all revenue opportunities. When they're doing expense recoveries by hand, there's an opportunity to miss things. And I've got lots of stories, both personally that I've done and doing presentations where you talk to uh, real estate organizations and they tell you about how they were using Excel and they missed a line item because someone added a GL number, and they missed. My favorite one was Shorenstein Properties in San Francisco, where someone missed a $50,000 recovery. $50,000 is a lot of money. Okay, I don't care what gauge you use, but more importantly, and I'm going to use a little math here because what's really important is to understand valuation, that a $50,000 miss at a 5% cap rate means that they lost $1 million in value. 50,000 divided by a 5% cap rate is $1 million. That's huge, $1 million valuation. So, you know, track that, because when they miss it, they're not just missing NOI and cash flow. They're killing the value of their property. And even if it's something as little as a $10,000 increase in NOI is at a 5% cap rate, a $200,000 increase in value. So that's why that's so important. So again, we talked about late fees. The lease may call for a refundable deposit and a last month's rent, or if it's a multifamily, it could be a pet deposit. Whatever the case may be, you want to be able to track it. Again, checklists, we haven't set those up yet. Of course, we're going to track insurance at the lease level. And again, like I said, property managers hate having to track that kind of information, but with Sage Intacct Real Estate, they can easily track it and get alerts for it as well. Options or other encumbrances. The most common option in the commercial real estate business is going to be an option to renew the lease at a fixed period of time. So it could be they can't do it less than a year before the lease ends, and they lose the right to exercise that option if they don't do it within before 6 months. So they may have a window of opportunity to exercise that from 1 year to 6 months, and if they do it 5 years and 5 months and 29 days, they lose that option. So it's really important to track it. Other options could be for a right to additional space. That's a common one, right? I want the end cap because in retail it's important to be on the end, or they want additional space. So they could, or they could want to buy the property. They could have a first right of refusal when the landlord decides to sell the building. So it could be any one of a number of things. You want to be able to track all of them, and we give our users the ability to track any type of encumbrance that they may have. It's unlimited and user defined. And then, of course, we've got attachments. I like to show a lease here. So, and of course, it's coming up on my other screen. There it is. So, again, a central repository, they can scan their leases and attach it right to the lease level. This is the lease we used. Look at that. 8-point type, single spaced. It's enough to make your eyes bleed. So I've abstracted leases ranging from a 2-page Marshall and Stevens form lease that you get over at the stationery store to the Apple lease at Washington Square, 110 pages of snoozer language. Okay, so that is the lease. Now, again, the issues that we're addressing here are lease administration, maximizing NOI, uh, capturing all revenue opportunities, um, tenant relationships. You know, when you have the ability to pull up information quickly when a tenant calls, it's very, very important. You know, they're business people. They want to get on with their day. So if they call up to ask a specific question about things that are going on their lease, you don't want to have to say, I'll call you back later. You want to be able to get in, get them their information, and get off the phone because they're busy with their day. And of course, property managers are busy with their days. So next up from here is the charges. Um, the biggest issue is how easy is it to, they call it running a rent roll. So to generate scheduled charges, I can have the cutoff date and all of my properties here. And so I can run the rent roll and schedule charges for my entire portfolio one time. And I don't have to wait till the beginning of the month to do it. I can do it a week in advance, because one of the other advantages of the Sage solution is the ability to, I can email out my invoices, or as well as print them out and send them by mail if anybody does it the old-fashioned way. So it makes it very easy to do it. I can generate it, review it first, and then log it in. And then, of course, when I generate the charges, and I'm not going to do it because I'm running my demo data right now, is I can go to accounts receivable, and I can see all of my tenants here. There's my tenants, which were we changed the name from customer to tenant so that they can see it. And then if I can search on it, of course. So if I go up here to see Brandon's Bibles, and I can go in and get the information from my tenant right in one place. I can see the location and the lease and the tenant's name, any additional information that's associated with it. One of the things I like to point out here is the ability to create a custom invoice. That's a big deal, because it's the one-offs that kill property managers. A specific tenant could say, I need to see the information in a certain way. And with Sage Intacct, because we're using the accounts receivable functionality, not custom work in Sage Intacct Real Estate, that means that I can create a specific invoice for a specific tenant. And that's a big deal because the other guys can't do that. Makes a big deal. So here's my email templates as well. Additional contacts, unlimited, as you know, item cross references. And I was doing a presentation and someone said, well, we want to track, they call it COO, a certificate of occupancy. So I went in right in front of them and created this tab and this specific field. And for the sales team, doing a fast custom field is huge, because the other providers can't do custom fields very well. With Yardi, they call it one-to-many tables. And it's difficult and it's cumbersome, and they don't have access to it. When I go over here, I like to point out that I can do custom fields and that I can create different views based on the needs of the user. So I can go in here. So if I go in here and say, give me a new view, manage views, I want to create a new view. It's all in one place. So I can see all of my information where I need it. I'm going to change this from invoices to tenants. And there's that COO information. So I can search on it if I need it. And I can see here Brandon owes us $579, and I can drill down and see where that came from under edit, right? So all of my information in one place. Another advantage that we have is, again, being able to do custom views, custom reports. In MRI and Yardi, if you want to do custom reports, you have to be a SQL Server report services guru to do that. That's how you get information out of those systems. In RealPage, they have a white label version of Intacct, so their accounting is great, but they've been off the Intacct code base for 4 years now. So they're running in their own code base, but they have some of this base functionality. So it's important to note that. I doubt very seriously that we'll be up against RealPage anytime soon, because RealPage does not play in commercial, and they really do have a lockdown on the multifamily side. So just for your information. And then finally, when I do a presentation, one of the things I want to highlight is the fact that I can do dashboards. I don't have any set up yet, so that's why I'm not showing you. But I do have the ability to do a custom report quickly. And what I want to show when I'm doing a presentation is the ability to do a financial statement quickly, because if they're on, I'll use Timberline. I hate to bash Sage CRE, but Timberline's financial statement designer was very, very difficult to use. So, and Yardi, you can't do financial statements easily. RealPage again uses Sage Intacct, so yeah, they can do it. And MRI says that they can do it, but again, SQL Server. So it's really kludgy. I can come in here and Stacy, I'm going to do one for you. So if someone said, oh, I want a, and look, I even spelled it correctly, Stacy's financial statement. And one of the most common ones is a budget versus actual variance. So there's Stacy's, so I can call it whatever it is. If I'm presenting this in front of a group, I'm probably going to take someone from the audience. I'm going to select account groups. We've created a couple in here. We'll start off with property. So I'm going to do property expenses. And of course, property revenue. Oh, obviously that's not the right order they're going to be in because it's revenue minus expenses. Then we're going to have NOI. Do I want details or summary? I want summary for NOI. And of course, how do you build a financial statement? Well, I'm going to start off with actual. So it's very easy. I've got actual here. I can say what I want, what months, etc. I want to add a column. How easy is it? Right there. Now I'm going to do budget. What do I want? Oh, let's see. I want a variance report. So I'm going to do a calculation, computation on columns. It's column 2 minus column 3. And we're going to do it as of my demo data is, let's just do it 11/01/2021. And I can preview it. And people love this because what I did, timed that was like 3 minutes, right? So it's extremely easy to do, and I have the capability of drilling down. This gets people, you talk about the warm and fuzzies. This gets people goosebumply when they're sitting in the audience because our competition can't do this. So, and if I want to print it out or put it to Excel or email it, I can do it right from here. And this was just the preview. I can go through, I can do additional computations and filters, even down to the point where I can put it right to the dashboard. I can just publish it right when I'm finished with it. It's a huge time saver, and the challenges that we're meeting here are, again, breaking down those information silos, performance communication, stakeholder communication. I can easily create the financial reports that my stakeholders need without breaking a sweat. And it's really important to the people in the real estate business. They can access this information with the proper security and see what they need so that they can be proactive in their decision making. And on that note, we're going to conclude. I'm going to have more stuff for presentation when I'm done with the presentation database, including more dashboards. In fact, I was just working on that this morning. I just got off a call with Dom Pernay about what kind of dashboards and what kind of reports we want to build for the data set. So are there any questions? Wow, I'm that good. Great. Okay.
I don't have any questions.
Hey, Perry, this is Craig. I had a quick question on, and this is probably more on the sales